in quite a while, like I normally say, but it's been the holidays. It's been nuts. It's been crazy. We've had Christmas parties. We've had so many awesome things going on in our El Paso community. But, I feel the most important part of, being in the real estate industry and being in partners with so many people here in El Paso, Texas, we have to remember what's really happening in today's market. And I hope that I can hit many of you guys up by just, these awesome nuggets that I learned with Andres and his team these past 2 weeks that have dramatically changed our consumers, either their programs or their overall view of the market and, what's happening with rates and what do I do? Is it a buyer's market? Is it a seller's market? And Andres today, so let's go ahead and welcome Andres. He is with All Western Mortgage. I was going to say AWM, but I wanted to say the whole the whole entire company's name. You are with the Prestige Group, and I've known you for a couple of years, and I thought that you would be the perfect example to let the El Paso Realtor community know on what's happening with consumers right now purchasing, what is going on with inflation, which we know that declined just a bit, but then the Feds raised the rate, 0.5%, which isn't a huge double digit, but or a big digit.
Right.
But go ahead and introduce yourself and let El Paso know what we're doing, what we're seeing, and how we can help.
Okay. Well, thank you, Ms. Jackie. This is again Andres Vasquez with the Prestige Group with All Western Mortgage. Jackie hit it, the nail on the head. It's funny to how to gauge interest rates, and when we're in terms of the Federal Reserve. Yesterday, they raised across the board a 50 bip hike, but remember that doesn't correlate completely to a mortgage rate. So if we were looking at 6.875 rate today, it's not going to be 7.375 tomorrow. It's not going to take a 50 across the board, but it will be some impact. But remember, that's more for financing. The Federal Reserve rate, when they increase that rate, it goes across the board for all types of financing. But yes, you're right. And as much as we got a betterment in price, there was that hike. So it's sometimes difficult to gauge because we're looking at off the 10-year Treasury. We're looking at MBS, which is mortgage-backed securities. We're looking at a lot of different things. And so consumer confidence, pricing indexes, all that correlates into what we're going to see in an interest rate. But so definitely the market's up and down. But what we've done was, if you alluded to, Ms. Jackie, is have this temporary rate relief program that we have. It's a temporary buy down. It helps your buyers, all the buyers across the board, in either conventional or government loans. We're able to, with a seller concession or seller credit, use that and buy down a temporary rate, because we know that this is not going to stay forever. These rates are still temporary. Now, we don't have a crystal ball. We're not psychics by any means or a stretch of the imagination, but we do know that this is not going to stay consistent forever. And so what we try to tell our consumers now is, don't make a permanent decision on a temporary situation. People are shying away from the market. No, I think that right now is the best time to buy. We're getting true value on our homes, right? You're buying a home for what it's worth now, not overpaying for something, right? Or that's the first thing. Inventory levels are getting better. Definitely a good market to buy in. But I mean, we'll go through a whole other segment there. But definitely rates are a roller coaster ride. We felt it. This year was definitely a tumultuous year, to say the least. But we're ahead of it. We're ahead of that. And so that's what we do, is try to create programs or try to be ahead of the curve for your buyers.
Exactly. And you did hit it on the point there. Is this is a temporary storm. All this has been temporary. So the goal at the end of the day is to get with partners who can overcome a solution. Meanwhile, we're in this storm to weather it out and, of course, help the consumer, which is you buying a house if you're out there right now. We have come together to be able to find a program or programs to help you with that mortgage payment on a monthly basis. Is that right? So I know that a lot of buyers out there, or if you're looking to buy a home, you're like, what's going on? I hear all this horrible news everywhere. I get on TikTok and it's horrible news telling me not to buy. I get on,
Right.
CNN, or I hear it from other agents or XYZ. What can you tell us that has been the #1 program to help consumers right now? And it is the 3-2-1 buy down or the 2-1 buy down.
Correct.
How has that helped consumers? And please, so that we can all know, and every agent in El Paso too and around the world, what is this program and how can it help our consumers?
Okay. So it works both on conventional and FHA or government loans, FBA as well. It's what we're doing, and right now, again, going back to the perfect time to buy, we're seeing that sellers will give concessions again. Once again, when the market had shifted before, we weren't seeing a lot of seller concessions. People were coming in with their closing costs. Buyers are coming with their closing costs, everything, and now the market again shifted once more. Now we're seeing concessions. We're seeing rate relief. They're giving money to buy against points. And so what this program works, it has to be seller driven. It has to be given by the seller, and as long as that it pays for that whole buy down, and it's temporary. So what it means is, for example, a 2-1 buy down, year #1, say today's rate was 6.75, and it's pretty close right now. That's kind of where it is, 6.5, 6.75. So let's just say today is a 6.75. That's the rate that we're offering you today. Well, on a 2-1 buy down, we use monies that is given from the seller and put it into an escrow account, buying down that temporarily buying down that rate. So for the first 2 years, the first year is 2 points. So that means the year one, your payment is derived off of 4.75, not the 6.75, 4.75. And then the next year it goes back to 5.75. And then ultimately after that, it's going to go to 6.75. And, for the remainder of the term, of the 30-year term. The goal and the intention is, since it's a temporary situation, is to be able to refinance later, right? And people say, well, refinance has costs. It does. But what this program does is whatever is not used. So let's just say, 6 months into this program, 6 months into your payment, we see that rates take a really good dip. Then it's a good time to refinance right there. We say, okay, what about all this cost? Well, the seller concessions that was given, what happens, the remaining goes as a principal reduction. So we're able to roll up all your finance costs on your refi, and it's offset by, and sometimes could be dollar for dollar, or at least the majority of it can be offset by the principal reduction that we get from the remaining amount that we didn't use. That's basic. So it's almost like a credit towards that. And that's what this temporary rate relief. So it gives us time. Now, let's just say rates don't take a dip for another year. That's fine. You're still within that time frame. And even then, it goes back up to the 6.75 after, the consummation of the term. So it just gives us enough time. A 3-2-1 is obviously similar, but it's obviously 3 points, costs a little bit more to do as well. We would need a little bit bigger contribution. Typically we're seeing about 4.3% of a loan amount. So we're gonna need about 5% concession from the sellers, stuff like that. But it has to be seller driven. So I do want to make a point of that. You cannot buy, it has to come from the seller concession standpoint. Yeah.
And I'll set an example for people who don't know maybe what is a seller concession. It means, and I'll give an example on how maybe we could do it or how you can promote, is instead, maybe you have a home that's sitting there, and instead of getting a price improvement of $5,000 or $10,000 of reducing, say $100,000 to $90,000, you can keep the $100,000 and contribute $10,000 to the buyer to help them buy down the rate for the first 3 years, and that money stays in there for them to refinance.
That's correct.
So that's a way that we can help each other out, is instead of giving $5,000 just towards maybe, towards closing costs, they could use that additional money for the buy down.
Right. And anything, I'm sorry.
Okay. Is the seller contribution for the 3-2-1 buy down one fee, and then you have the closing costs another fee? Am I right?
Yeah. And there could be an excess amount. So typically we're seeing that a 2-1 buy down costs about 2.3% or so. of the loan amount. So if you get a seller contribution of 3%, the program is paid for at that point, and the remaining 0.7%, let's say, can go to the closing costs for the buyer. So but it just can be opposite. We can't be short on that. It has to be fully paid for. And again, the 3-2-1 buy down, a lot more expensive. That one's about, I believe it's about 4.6. So you get a 5% contribution. The remaining 0.4 can go to the closing costs. But the buy down is a specific, on itself. It's a different entity by itself.
And the goal at the end of the day, team out there, is to help the buyer refinance
Absolutely.
year 2 or when the interest rates dip.
Correct.
So,
Correct.
So the Fed's obviously raised it by a little bit. Sure. Have you seen an effect on that at all? Or are we, because applications were up 4% this last week, and even refinance applications were up 3%. Mm-hmm. So what does that tell you as far as where we're heading for Q1 of 2023?
Well, I think it's softening up a lot. I think we're definitely looking at so inflation wasn't as prominent as people thought. It wasn't as it didn't hit as bad. El Paso is a different segment anyway. I think that the economic matrix in El Paso, we're kind of weathered from all that stuff. The trickle down effect doesn't get us that much because we're already used to putting another notch in the belt. Man, if I have to eat tortillas and arroz and and frijoles, that's what we got to do, and so we're okay with that. I think that's why we're not affected as much, I think. But even then, on the whole, I think that it's already starting to curb. I think it's already starting to curb. Of course, we're not prognosticators or anything like that. But even what the Feds have been saying and speculators have been speculating is that around March or so they would start to dip. I think that we've already seen that curvature starting to flatten. So I think that's where we are. And I did want to mention though, Miss Jackie, is about buying today, and the one thing that's a constant variable. The inconstant is rates. They're definitely all over the place, but the one constant remains, and you'll allude to this fact, is that the home prices continuously rise. The appraised value it continues to increase. So what your buyers need to know and your audience needs to know is you need to start building equity now. You can always refinance later. That's the opportunity, but you're building your capital, your wealth, your growth, your legacy based on today. And you have an opportunity to do it today. The longer you wait, we can wait. You're spinning wheels. You can wait longer in hopes that it'll curb, right? The rates will get better, but then you're missing out on equity. You're missing out on product and inventory. So it's still always going to be the best time to buy. The best time to buy is now. You're going to pay a mortgage, might as well be yours. That's the way I say it. Are you there, Miss Jackie? Hello.
You're still on. Oh. Okay, are you there? Okay, cool. So Okay, I think Edgar's watching. If anybody else is watching, just give me a thumbs up or that you can hear us, just because we don't want to miss something that's super important that Andres is discussing. But I tell Edgar all the time, I don't like to preach anything that I haven't done myself. Correct. So, for instance, we just closed on some real estate at a 10.99% interest rate. Mm-hmm. But we are waiting because we know it's a temporary time where we can refinance when the rates come down.
Absolutely.
Your mindset is growing that wealth in that real estate. So you got to shift your mindset into good positivity on what you're actually getting from the real estate than worrying about the temporary. I don't want to be that agent that, you're just trying to sell me. You're just trying to make no. We are trying to get you into the wealth, aspect of real estate. How do you feel about that? I don't know if you want to correct me. Maybe I don't think I'm wrong getting real estate at 11%, but the wealth is there.
Let me. You hit that point dead on, Miss Jackie. I love that concept. I love that philosophy. And I'm going to tell you that it aligns with just a recent buyer of mine. We refinanced. So it goes to like who was going to refinance in this market. It was about 3 months ago or so. We did a refinance. Her home was completely free and clear. It was a cash out. It was a cash out a loan. We took out, I would say, a little bit over 140, $150,000. And what she used that money to do was to buy 2 other properties. In this environment, exactly. I was like, at first, so we have what's called the DSCR program, right? It's called Debt Service Coverage Ratio Loan. After she qualified for the refinance, that one's based on your ability to repay, on your finances and your income and such, your DTI. But the other 2 loans as investment properties, the DSCR loan is paid off with itself, with its own rent schedule. So as long as the rent, your mortgage is $1,100 and you're renting it for $1,200, $1,300, whatever it is, it pays for itself. So there's no income qualifying. So she had enough money down, good credit. She refied, she took that money out and purchased 2 properties concurrently. One closed on Wednesday, the other one closed on Friday. And I was excited. It was an amazing thing. She became a first-time investor through right now the knowledge that's available and through the situation that we have. She capitalized on the fact that now sellers were giving concessions again. The market had already shifted. It's a perfect and it's a prime time to buy. Do it now, because what's going to happen again when the rates go back down? Then everyone's going to get back into the market. But the ability to do it is to do it today. That's still my philosophy, and it goes with what you say as well.
It goes hand in hand, because if rates go down, what's going to happen? Everybody's going to start applying, which we do want, right, buyers to buy. But that it puts us back into the frenzy of having to compete. The sellers aren't going to give, assistance with the contribution. It's going to be a little bit harder to negotiate. So right now that we are curving into a balance, you're able to purchase a home with those concessions, meaning,
Correct.
The seller's giving you that money to buy down the rate.
Correct.
Or for closing costs, XYZ. So it's still, to me, in my opinion, when clients ask me, or people, how do you feel about the market, Jackie? Is it a good time to sell? And to me, to buy or sell, right? It's always a perfect time for real estate.
Absolutely.
And I know I think that's where buyers and consumers get, strewed in a way that is negative. And I think we need to weed out that negativity and educate our community on the type of programs that you guys came up with. So let me see. Don't wait too long, right? So because then demand will happen, and then you're going to get more in the frenzy of having to win less than win more. Let me see. What else can we go over that you can say that has helped since these tools came out, these resources came out? I know that you have a program that's where you'll buy their house cash while they wait to purchase, or other one on contingencies. Can you tell us a little bit about that one?
Sure. That's part of what's called the Cash is King program. What it is on what we do is we put the file first and through underwriting. We want to make sure that it meets a certain amount of guidelines. But if the ratios are healthy enough to a certain criteria, and in order and usually we were seeing this when you had a bidding war, or you had multiple offers on a house. The one that's going to cash is king, right? That's why it's called cash is king, because that's the one that's going to win. You don't have to wait for lenders and stuff like that, the whole process. So what we would do, if the qualified buyer was that well qualified enough, and it really went through some part of the underwriting process, and it still had more to go, what we'll do is that we would buy it in advance through our heirs and assigns, and that would allow your buyer to now basically offer cash and win that deal. And then what happens is in the process, we're still closing on the regular loan. So then it gets rebought back and done, and it's all in-house at that point. But it gives your buyer that potential to do. In fact, there's another component to that program. It's called the trade-in. So, and that going to your contingencies, someone has to sell a home and get those proceeds first in order to buy their next future home. What'll happen is we would buy at a certain amount, and it's about It's about 90% of the value of the home. We do a CMA, a market analysis as well, and just denying in too many details. But basically, we buy it in advance, and it's done to give them that equity that they need to buy the purchase the next home, and the listing agent can still list that house while it's still being sold. That way, they don't have to move until they purchase the new home. They move in easily. You have to relocate. That's a really cool component to that product as well. That's called a trade-in program, an extension of the Cash is King program.
I really like that. That actually would benefit a client of mine that is selling and he needs to buy in San Antonio. And there is a home that they absolutely love, but we need to sell this first. So that would be hand in hand for them so that they don't have to put a contingency and possibly win that deal. So this program would help hand in hand with that.
Exactly. Yeah. Yeah. And I don't know that if you want to add for this little tidbit of information, part of our prestige promise is that if we don't close on time, there is a 200 per diem, $200 per day that we're not closing on time. So we don't like if you're scheduled to close on the 30th, it's not a suggestion to us. That's the date you're going to close or sooner. But for every day that we're short on that promise, we make things whole. We give you $200. We give the seller $200 a day for every day that we missed our mark. So it's a really good badge of honor to show, and that we're willing to do that because we know that we're going to hit that mark. And then another piece to that puzzle there is if for some reason, and we're all human, we can make mistakes. All of us are subject to that every now and then. I know you don't make any, Jackie, but we do. The rest of us do. No, I'm just playing. But so there's a prestige promise, the guarantee that if for any reason after it's gone through underwriting and we give you this certificate, and it's gone through it's our underwriting department, and for something happens, underwriter missed something, a loan officer didn't do something right, something happened that is not is related to us, we will pay the seller and the agents $15,000 for that botched deal. Because what that did, it allowed you not to be able to explore other options with other buyers. We basically wasted time. So we're willing to put that promise out there. And for first responders and our VA community, that is extended to $20,000. So we want to make things whole. If we ever go into that situation, we're that confident that if we were to miss the mark and not be able to close for some reason of our own, then we're able to give you that guarantee.
Absolutely. I feel like everything that's happened since COVID, it was a good and bad, right? Because everybody was able to buy at the lower interest rates. They were so historic and so forth. And now that we're, increasing and so forth, I mean, what have you seen, or what have you, accomplished for homeowners here in our hometown city? And where do you see us going from there, or by them coming back to buy, right?
Well, I think I know that we got to break the stigma of that it's just a rate-driven deal. I think that there's more beyond that, but it takes education. It takes the community as a whole to really or to spread that word, that message to across the board, that it's just not a rate thing only. It's important by all means, of course. I mean, that's where our payments are driven by. But it's, again, like we talked about, a temporary situation. I think that when the rates dip, we know that the consumers will come back a little bit faster, and more readily, looking at homes at that point. But I think that we need to educate them now to really capitalize what we have today, and to not be scared of just a rate. I mean, it's really sometimes saddening because it's blocking them from a bigger potential, and which is buying equity now, because that's the only constant. Because rates, again, we talked about it, rates are in constant. They go up and down. We don't know where they are. Most of the time we try to gauge it. We try to be ahead of it, but at the end of the day, it's still something that you can't forecast completely. But with the one constant factor is that your home prices, the valuations, that one's been on an increase for the last 12 years. there is no slowing on that curve. And so the only thing that you can bank on is that the home prices are going to continue to increase and equity will continue to increase. And that is the most important thing for them.
I love that you mentioned that. I don't see us decreasing in prices and valuations on our properties here. I
Right.
really don't see that. So I feel if you're on the fence, you have to get in the game again, kind of like Monopoly, right? And get in there and roll the dice and see where you're at and see how the lender, whoever you go with, and utilize Andres to do that 3-2-1 buy down or the 2-1 buy down. If that works for you, then we can go after that property and ask the seller to contribute to that. So at the end of the day, I feel in your title, of helping consumers qualify for a home and us finding the home from them. I think right now in today's market, it's all about the buyers. It's all about the consumers right now. So we have to do a 10x job to be able to deliver that Paso. No? Yes?
Yes, I agree.
Okay. So I guess what we can say tomorrow, I know you're having a buying seminar at tomorrow's open house. I think you guys are 12 to 4. Yeah, 12 to 4 p.m. Mm-hmm. You will be there. Doesn't
yes,
necessarily people can go and qualify for it. We're going to have a promotion of showing you all our signature homes with the 3-2-1 buy down and the 2-1 buy down to see what the seller is contributing that. So that's amazing.
Absolutely.
But you can also come and visit and sit down and say, hey, roll me a scenario, roll me a payment scenario. Yep. Tell me what is it I need to do. Tell me what is it that I need to come in with for 2023 so that I know that my goal is to buy real estate.
Exactly, and we'll be available to do that completely. We're gonna have a little bit of some goodies, some refreshments, of course, for you folks, for everyone that wants to stop by. Please come get that education piece. The biggest fear for a lot of people is the uncertainty or the fear of not knowing. Let us educate you. Let us help you in that. In our field, of expertise is lending, and we want to make sure that everyone has an ability to qualify. We really have such an array of programs that if we can't qualify you, it's really going to have to be hard money at that point. But even then, there's always a home for somebody. And I think that what I tell my buyers all the time is, as long as you give that effort, I'm going to match that. I'm going to do as much as I can to help you get into this home. You've got to want it as bad as I do. I want to get you into this home, and I will help you no matter how long it takes. And then sometimes remember that a no for a buyer that I can't qualify doesn't mean a no forever. It just means that no, let's work on this, but I can get you here. No se desanimen, don't shy away from it and don't get discouraged. We've got a chance, we've got an opportunity, but it's got to start today. So you've got to maybe change habits, maybe get some savings, maybe no more overdrafts on your bank statements, whatever it is. Give us a couple of months and come back, but don't get discouraged. Even if a no today doesn't mean a no tomorrow. That's just my philosophy. But
absolutely love that. And I do want to say that me and Edgar and our team, we don't focus on 30-day closings. We focus on forever closings. If it takes me a year to get you qualified or 2 years, that's the route we're going to go. And if it's a hard file, then it's a hard file, and we are going to accept it with graciousness and humbleness. So I want everybody to know that. You got to know where you have to start. You have to know what's on your credit. You have to know where you need to be.
Absolutely.
Andres is really right. We came down from 8.8 and a quarter in inflation. I think we're at 7 point, I don't even know what it is. It's a little over 7% inflation. We're supposed to try to go down to 2%. That's a big gap. So, I mean, and I don't know how people are spending, right? But people are spending galore. Everybody's Christmas and so forth. But try to set back just a little bit. Cook at home a little more. Maybe you don't have to get extravagant gifts. Maybe you tell the family what your guys' goals are for 2023, and that's a home. And maybe everybody's on the same page of that. But you have to be able to start somewhere by knowing where you stand. Even if it's a credit of 400 or 550, maybe in a year and a half or a year, we'll be able to get you there. So yeah, like he said, don't overcharge on your credit card. Don't be late on your payments, and don't spend so much. Start saving. And I think you're going to have a successful 2023 if we do that.
Absolutely. I agree. I concur.
I don't know if you want to add anything else, Sandra. It actually feels good to speak to, you and to know where exactly we're out in El Paso, and speaking to our consumers and our agents on being able to educate with kindness and positivity, and
Absolutely.
not so much negativity.
Yeah, absolutely. I just, that one thing I'll add, and you bring up a great point, Miss Jackie, that um, let's get the first consultation. Even let's see where we are. I mean, if it looks like it's a project, for your buyer to, maybe it's a 1 year long project, it's a 2 year long project. It's what it is. But let us give you that first view. Let us give you that consultation to show you, to help you, to guide you, to give you a path, give you some direction and a plan of action. And that's the most important thing, is just start with day one. Let's just get day one in the books, and let's take it from there. But let us help you. We'll be happy to help you, and get you some coaching, some direction on what it takes to achieve home ownership.
Thank you so much. I love it. This was a great podcast today. Well,
All
I
right.
want to wish everybody a very Merry Christmas. We may go on maybe one more time, but if not, I want to, bless everybody out there. And, I don't know if you want to add anything else, or we're good to go.
Thank you, Ms. Jackie. No, thank you for the opportunity to be here to talk to your audience. I would really love to help them, assist them. We try to do quick turnarounds. Any applications that come in, we try to get them within the first 2 hours of touch. So we'll be able to get you a quick reply within 2 hours. That's our goal.
Yeah, we'll see you tomorrow, 12 to 4 p.m. Put it on Facebook so that everybody can know where to go to the home buying seminar. Okay?
Yes, ma'am.
Have a
All right.
good time. You too. Bye.
Thank you. Bye-bye.